Hello and welcome to the VentureForth podcast. I'm your host, Joe Mahavuthivanij. We'll be chatting with some of the most interesting founders, startups, and VCs about the experiences that led them to where they are today, what they're currently working on, as well as the journey ahead of them. Hello, VentureForth listeners. Today I'm excited to welcome Michael Berolzheimer, founder and managing partner of B Partners, a fund specializing in partnering with startups at the early stages of their business. Some of their notable pre-seed and seed investments include TubeMogul, IndieGogo, Tradesy, TBH, and even Bear Naked Granola. Pre-seed funding is a particularly interesting stage for me because it's by far the most risky, often with green founders making the pitch with little more than an idea on the back of a napkin. It's also a process that I'm currently working through myself. On this episode, we'll explore pre-seed, dig into B Partners' decision-making process, as well as the evolution into partnering with blockchain startups. Without further ado, I'm excited to welcome Michael to the show.
Joe, thanks for having me, man. I'd love to be here.
Awesome. Well, I'd love to start by hearing a little bit about your background and your path to starting your own fund.
Yeah, sure. There's a lot of luck that comes into career building, and I got crazy lucky in my first angel investment when I was about 23. I invested in some buddies of mine that were starting a granola company called Bear Naked Granola. And they had no rhyme or reason to do it, had zero industry expertise, and yet they were running through that fog of entrepreneurship that we all know very well now. And so I said, "Oh, come on, let's join them." And I made an investment, and 3.5 years later, they sold the company to Kellogg and did very well for themselves and for their investors. And so, I was hooked. I caught the bug. I was done and switched my career and moved back to California, where I'm from originally, and started to build my network of entrepreneurs and designers and product people and engineers to really, start my career again in the world of entrepreneurship in general. And, dabbled as a founder, but, Joe, I'm not crazy enough to be a founder, man. I definitely like the investor mindset and being able to meet everybody that I do along the way and be able to allocate them to a company and to an idea and to an opportunity. And so, investment and fund management has been my calling, and I'm absolutely honored to do the work that we're doing, especially at that pre-seed, which is so much fun.
So you mentioned that you, I guess, didn't come from the founder world. I'm curious what your thoughts are on, I guess, first of all, the role of VC, but also on whether there's, I guess, what the pros and cons are of having that operating experience before going into VC.
Yeah, I actually started 3 companies before I officially held up my flag and said, yep, I'm going to be an investor. And that experience was remarkable. We never raised capital. We put our pencils down every time. But those projects were instrumental in me understanding how unbearably difficult it is to start a company. And so that empathy that we built in those early days really honed our thinking about the type of founders and the character of the founders that we wanted to invest in. And so, while I do think it's important to have operating experience, the reality is that operating experience has a half-life that is accelerating even to this day. And so, as great as it is for founders to partner with former operators, the reality is that once you're out of the operating game, you are out of the operating game. And so, it's just important at the end of the day to partner with great people who you have high confidence will be there thick and thin through to the end and then beyond, and it's a potential decades-long partnership with that investor.
That makes a lot of sense. I mean, I think that it's probably unlikely that no matter how successful a Jeff Bezos or a Mark Zuckerberg or whatever become, they probably wouldn't start another company again.
Yeah, that's probably fair. Yeah, although they're starting 3 companies at the same time now these days and having other managers do it for them. So, yeah.
That is true. So how big is the fund, and what are the typical check sizes?
Yeah, so we've evolved to the point where we're now writing, on average, we're writing a $500,000 check to companies at inception. Sometimes founders come to us and they only want to raise $400,000. That's okay. We'll certainly participate and invest in those rounds as well. But the typical pre-seed round these days is between $500K and $1 million. And so, we're leading the rounds, we're setting terms, we're serving as that lead investor, and we're being really selective on the decisions that we do make. Pre-seed investing isn't easy. It really is about finding exceptional people to partner with and committing what our most important treasure is, which is really time, into each and every single one of these companies.
Definitely. The various stages of investing can vary by investor and fund. Why pre-seed, and what does pre-seed mean to you? I know that, the different stages can mean sort of different things to different investors, so I'm curious what your thoughts are.
Yeah, sure. Well, the seed has certainly become atomized, and there are a lot of different ways to play the seed world. Pre-seed is what we've been doing since the very beginning. I was one of the first investors in Bear Naked. I was the very first investor in TubeMogul that went on to go public 8 years later. We were the first investors in Tradesy, in Skycatch, and over half of the companies that we've invested in since to date. And, to be able to have the opportunity to say yes to a founder when they're, out there spilling their guts to all these investors and trying to raise that round that is so hard to raise because they're raising it on a promise, they're raising it on an idea. It's a really exciting time for us. We've embraced it. We love the noise that comes with the pre-seed, and we love the opportunity to shape and mold to a certain extent the go-to-market and the work that the founders are doing. It's not without its risks for sure, but at the end of the day, partner with great people, and that's why the name of the firm is Be Partners. It's about partnership with founders. So you partner with great people, and good things will come as a result of that.
Thinking back on the name now, that to become partners really makes a lot of sense. I read that you originally raised the first Be Partners fund, I guess in 2008, at the height of the financial crisis, and maybe the worst time to raise money ever. I guess, why did you decide to do it then, and was it easy or harder than you've expected?
It was much harder than I expected, Joe. Not sure if I would have done it the same way in retrospect, but it was very difficult to raise. I've been making a couple of angel investments after finishing up at UC Berkeley at the business school there, and had made a few angel investments and realized that I needed to build a brand and needed to build out a team and have really the rigor of serving as a fiduciary on behalf of limited partners, rather than doing it, frankly, just out of my own personal pocket or building out haphazard syndicates. And we had a commitment from the very beginning to have that the ideal of the firm and our objective of being partners, of Be Partners, on the wall every single day. And so that played a huge role in us deciding to go out and raise that capital, in spite of how difficult it was to do so. And we were very, very fortunate to have a handful of folks commit really to the team more than the strategy. And we were able to make a go at it. And looking back on that portfolio, I think we're going to do pretty darn well, given the fact that we've got companies like IndieGogo and Zapongo, Order Groove, Skycatch, Tradesy in there. It's a pretty exciting portfolio.
You rarely hear about companies raising their pre-seed funding. I guess, not that you'd read much about it in TechCrunch. Usually it's like, some company raised their seed. Right. But it seems like there's a growing number of funds exploring the space. Are more and more companies seeking funding at an earlier stage than they used to, or just not announcing the round publicly to stay stealth, or is pre-seed simply the new seed?
Well, that's a good question. I think pre-seed is the new seed. I mean, there's been a couple of events that have occurred. The old seed funds of 2009 through 14 have bumped their fund sizes up, and so now they're writing larger checks, and that's good. It's good for them, and they should be doing that. So that's important. I think that the opportunity to raise a small amount of capital, have some proof points, and get some points on the board before going out and trying to raise a larger round is super important. And you've got some multi-time founders and some more experienced founders that, frankly, are interested in pursuing their path without necessarily having to go through an accelerator as well. And so you get some of those more experienced founders with deep market insights that say, look, I know what I'm doing. I don't need to do the beauty contest of a demo day in order to go out and raise capital. So there's a mix of activities that have really taken place to have the pre-seed manifest to where it is today. But there's still founders going from 0 to 1, right? They're still at that start point in the starting blocks, and they're not going anywhere. That opportunity will always exist. The key question is whether investors are willing to take that big bold bet and say yes to a founder at inception, in spite of not having product market fit and not having any customers and maybe not even having a product to demo. And for us at B Partners, we've gotten so comfortable with the stage. When I first raised B Partners 1, we called it Genesis stage investing. It was all about that inception point. And so we've gotten so comfortable with it since inception that we've really carved out our own little niche here.
You mentioned that making these bets when there's a founder that's maybe more experienced and have deep market insights come to you, and that's a strong bet at the pre-seed stage. But then there's going to be a lot of the first-time founders that have no product or traction. At this stage, I think the only thing to use as signal is really the team. But what is it that you're looking for in the teams, especially like if they're first-time founders?
Yeah, I can't give away all my secrets, Joe. Now, we're certainly focused on how founders answer questions. I mean, it's far more of an interview and an evaluation of the potential partnership than it is necessarily of this being the path to success. We know that path is going to change, and we know that there are going to be learnings along the way, and we just through the diligence process, get comfortable with how that founder is going to respond to the good and the bad. And so, in our diligence process, we ask, pretty odd questions as to, what they've done in the past and what their plans are, where they're headed. And through that process, we're evaluating them, and we're also, looking at the idea and the opportunity and seeing how big it potentially could get. So it's really about founder fit, like founder problem fit, and then B Partners founder fit. And when those two happen, we dive deep and get pretty close to making a commitment to those companies.
So pattern recognition is obviously important to VC and trying to identify whether it's through the interview process or their backgrounds. I noticed that on the B Partner website that there was I guess you draw a hard line with family founders, meaning like, I guess, husband and wife teams, brother and sister.
Yeah.
How do you weigh these patterns that may develop, like pedigree, resume, etc., versus potentially developing biases? And I guess why are family teams left on that hard line?
Yeah, well, we certainly do. We, meaning investors, we certainly create biases, whether they're accurate or not. I mean, everybody can point to specific examples of family teams that have produced unicorns. And so, we know that we're giving up opportunity as a result of that. And yet, everybody's got their own personal experience. And I'd rather not partner with a team where, the boss has to make a hard decision and potentially fire a family member in those difficult periods. So we just aim to avoid that, and it reduces complexity for us. But, pattern matching is important. As for pedigree, we've invested in founders who are high school dropouts and spent 2 years being a minimum wage employee at Taco Bell. It doesn't matter. Innovation comes from everywhere, and there are founders who demonstrate incredible grit in their previous lives that they look back upon as founders and use it as a source of energy. And so we aim to identify that and remind those founders of what that source is, because the roller coaster is intense, and it gets no less intense however large the company is. We want to be there for the founders all the way through, an unconditional partnership with founders from start to end.
I recently read about the so-called implosion of early-stage funding, specifically noting that seed and pre-seed stage deals are falling, even halving in some cases. I think we're aware about the Series A crunch, but what is the source of this implosion, if it exists? And is it fewer early-stage companies, less early money, rising valuations, bursting bubble, crypto, some other factor?
A little bit of combination of everything. We certainly see the reduction of volume happening as a result of angel investors having just a really fat portfolio that has not become realized and become liquid. I think that's contributed to the malaise. Certainly, institutional managers moving away from pre-seed and demanding traction in order to make progress has contributed as well. And there's no doubt that the crypto craze has contributed to it as well. So, there will be funding sources. There always are funding sources for exceptional founders and exceptional ideas, regardless of the cycle that we're in. And the best feedback that I can provide to founders is just find the right fit with your next partner and be patient when you're out there, essentially interviewing for that long-term partner that you're aiming to build.
Makes a lot of sense. So with that, then, what is B Partners' investing themes and the focus? What kinds of companies are you looking for?
Yeah, so about 85% of our portfolio has been companies with a business as a customer. So it's generally speaking enterprise SaaS and B2B opportunities. We've also had a deep focus on marketplaces and market networks ever since the beginning. I mean, our first investment in a marketplace was really IndieGogo, and then shortly followed up by Tradesy. We've had a pretty high hit rate on the marketplace side of things. We've been pretty active in the industrial tech space, doing investments in drone technology and 3D printing, enabling technologies, and even dabbled in robotics as well on that side. So that's been an interesting theme for us, and we expect that to continue over the next couple cycles. But, our job is to sit on that frontier curve of innovation and look ever outward over the horizon and find remarkable founders that are working on new things. And so when we see that, we take a step back, we slow down, and we really evaluate those opportunities. And that's our responsibility as a pre-seed investor. One thing I'll add there is that what we do at B is we trust our founders to have the deep market insight. They know where the future is headed, and we're just really there to be a support mechanism and to be a guide. And that's an interesting construct relative to a lot of other fund managers out there that really going to believe the future is going to be one way, and they go find founders that subscribe to that view. And that's just not our approach at B Partners. We run into the guys that, the founders know the way, and we're there to support.
I believe you recently added the blockchain investment consideration under the Frontier theme. What prompted this addition, and what's your thesis? And ultimately, how are you evaluating these kinds of businesses differently than, non-blockchain businesses, especially as you just mentioned with founders with deep market insights? I mean, this is Wild West territory.
It really happened about a year ago that we started to realize that we were on the cusp of an explosion of opportunity. And so as a smaller fund, right, as an emerging manager, we have to be really mindful of the slots that we use for our fund. We had some of our companies coming to us and saying, hey, what do you think? We're interested in potentially raising capital using a utility token. And so we committed as an organization to build a knowledge base and to build a network base so that we could properly evaluate opportunities in the cryptographic token space. And since we've done that, we have continued to learn. Every day we're picking up another tidbit and building out our frameworks to make specific decisions about opportunities. And this, again, it goes back to the whole notion that the founders are there on the frontier curve, innovating and creating opportunities for potential disruption on various markets. We leverage our time that we've spent already and our expertise around marketplaces and market networks, and so it should come as really no surprise that given our expertise in the marketplace side of things, that B Partners is active in the cryptocurrency world.
And then to add the theme, then did you have to get approval from your LPs or modify your LPA?
Yeah, let's be clear there. So we are not a dedicated exclusive fund on blockchain by any stretch. There is innovation happening in a lot of other sectors and vectors and innovations, and so we're really mindful to not exclusively focus on that, and we have good reason to not do so because of the pattern matching and the IP that we've got around other sectors that frankly aren't going to be impacted nearly as much by decentralized ledgers. And so, to be clear, we're absolutely not exclusively focused on that. We're absolutely still in the business of partnering with founders and partnering with syndicate investors and the like who have different skill sets that they're bringing to the guys. It's been an education process on our LPs, and part of our partnership model here at B is one where it goes the other way. I mean, with LPs, we are a partner to them, and we're sitting on the cusp of innovation, and our job is to support them and help to educate them as well. So in the process of us committing to some projects, we've been educating our LPs on the opportunity set as well.
Interesting. And so with these kinds of projects then, because it is so, I guess, volatile, and I've talked to some funds, some funds are doing equity investments, some are taking tokens as part of a SAFT. What is your, I guess, B Partners philosophy on these kinds of deals?
The primary philosophy is discipline. Okay, so we invest in 5 companies per year. And so we need to be responsible with the capital that's been pledged to us by our LPs and not succumb to the hype that's around these particular companies. So that's where it really starts is responsibility and discipline. There are incredible opportunities that may very well take the form of tokens, and they may take the form of equity. And depending on the type of company or the type of project that's being developed, it may make more sense to hold one structure or the other. And so we've become open-minded and flexible as to what we can potentially hold and how we can serve. But again, there's so many of these projects where it's like a finance only, take it or leave it type of situation, and that's just not going to be a good fit for us at B Partners given our partnership model. So we're not going to stray from our core thesis, and we encourage founders who are looking for that partnership approach to come talk to us, because we'd be delighted to have that conversation.
Definitely. So has the fund done any of these blockchain deals to date?
We have, and we're looking forward to sharing the news about those in the future.
Awesome. So I'm curious about how you evaluate blockchain businesses, because, some of them are going to have an ICO. I think, many of them are aspiring to have an ICO. And blockchain-based businesses, they may have a huge liquidity event that, they have an ecosystem worth $100 million, but, maybe you want to invest at the pre-seed stage at like $4 million or something. Right. How are you approaching that, looking at these businesses? Because, frankly, the market's kind of crazy right now.
It is crazy. Joe, we spent months trying to apply our existing frameworks for pre-seed investing to many of these opportunities, and it just didn't work. They broke. The frameworks that we had internally, some of them broke. And so we had to start from scratch and really rethink how we are evaluating them. We took some cues from my old days on Wall Street. We had some folks who I reconnected with over decades coming in and giving us some feedback and insights from their perspective as currency traders and public equity investors. And so it's been an interesting last 9 months where we've had to rethink our frameworks about it. And it all starts with whether or not it deserves to be on the blockchain more than anything else, right? Are you in a situation where you need a centralized trusted source and there's an opportunity to pull that trusted source out to reduce rent? And we start from there, and then we peel the onion multiple times to really drive whether it fits for us at B.
That makes a lot of sense. It's always really interesting for me to hear people's strategies in approaching this, because it is such early days, frankly. And so I've actually been seeing a lot of sort of scammy looking companies out there.
I got another one for you. I got it today.
Gosh.
Every single day it feels like we get one in the inbox,
Yeah, I see them every day as well. It's crazy. We'll probably share notes on that offline. But so what technologies or things do you believe that need to be built on blockchain, or that you wish existed that don't exist today but could with blockchain technology?
Oh, well, we're pretty excited about Edge here, and so we're really looking for opportunities for M2M, to machine-to-machine payments and systems for that. So that's pretty exciting. So come talk to us on that. We're still evaluating kind of pickaxe and shovel type of companies that are not necessarily built on the blockchain, but are enabling technologies for the ecosystem to absorb and adopt. And that's another area of interest for us. And, frankly, with a portfolio of nearly a dozen marketplaces, we're also taking those cues and pulling them back into our existing portfolio as well.
Are you encouraging your startups to explore blockchain as part of their businesses?
We're mindful of it being an enabling technology, and if it fits, great. Let's consider it and explore it. If it doesn't fit, then don't. And so we're pretty diligent about encouraging or discouraging those founders from falling too far into the rabbit hole in evaluating it. And what we're encouraging founders to do right now is frankly apply to a program that's being hosted by us at B Partners. It's a blockchain awards program called the Frontier Curve Awards, and it's going to be hosted by one of blockchain's best, Monero's Fluffy Pony. So Ricardo Spagnini is going to be the host. And so if you have a blockchain business idea and can assemble a team with, hopefully one member of the UC Berkeley community, whether you're an alum or a current student, we encourage you to apply. It's at, shameless plug here, frontierinnovation.vc.
Well, we'll get to the plug portion of the show in a little bit, but and we can plug it again. But I'm curious, actually, this is sort of off track here, but I'm curious about the crypto market specifically. Well, actually, no, not specifically everything. Bitcoin Cash, Ether, everything's just going nuts, and it's been falling like crazy over the last week, wiping out billions of dollars worth of value. Given your finance background, what do you think is contributing to this? Is this just a correction? Is there something else going on?
Joe, we don't pay too much attention about what's happening in the current markets, to be perfectly honest. I mean, we're focusing on the journey. So it's far better for us to spend an hour developing a new potential resource like a VP of sales or a marketing expert or a VP Eng for our companies and identifying that as an opportunity. And it's boring stuff, but it's really, really important for us to continue to support our companies. And so we don't pay too much attention about what's happening outside and the ups and downs of the markets.
Got it. Well, I think that it's a good segue into our quickfire round that allows our listeners to get to learn a little bit more about yourself, about you personally. And so I'd love to start off with something I ask everybody about. What is your favorite book?
My favorite book is 2312. It's a science fiction book written by Kim Stanley Robinson. It's just a fascinating book about interplanetary development of the human species, and it's pretty cool.
I think, especially given yesterday's launch of the Falcon Heavy, and there's a Tesla floating around above our heads right now, that's pretty timely. That's really interesting.
I'd be lying if I told you that I didn't watch it 5 or 6 times last night, so it was pretty sweet.
What do you collect, if anything, and why?
What do I collect? I collect founders. I mean, come on, you should see the office here. We got a whole host of founders on the wall, and it's something that we're really honored to collect. So, founders. I collect founders.
What's one thing that you spend too much money on that you don't regret?
Oh, let's see. Well, my daughter's a bookworm, so I don't regret spending another dime on a book for her, and then Legos, because I got a little Lego monster at home. So I'm shameless on buying Legos for her. Yeah, and Girl Scout cookies too, because she's a little Girl Scout girl. So I don't mind buying boxes to bump up her target.
Nice. What band or artist would you travel 500 miles to see?
Oh, boy. Well, my cousin was the lead guitarist in a band called 7 Mary 3 back in the 90s. And I wish he'd still play with them because I would definitely drive long, long ways to see him. And the one artist I regret never seeing is Tom Petty, who I favor the most.
Definitely. What founders or investors do you look up to or admire?
Well, I mean, certainly Elon's got some guts. There's no question about that. We've got some founders in our portfolio that I look up to, given the hardship that they've gone through in both their personal lives as well as their portfolio companies. And it is an absolute honor when I get to spend time with some of the founders that are now, scaling their companies And so I look up to our own existing portfolio founders more than anybody else.
Awesome. Well, we've arrived at that point in the show where I hand over the platform to you to plug anything that you like. Again.
Okay, cool. Well, look, I mean, for founders out there, we never pass because it's too early. That's not a pass reason, and it's not an excuse to say no. So, the earlier that you are, the more interested we probably will be in partnering with you. And so we encourage founders to come chat with us about their opportunities and their ideas and what their visions are of the future, even if you're not ready yet. I would like to build a relationship. For folks with UC Berkeley ties, we are the moderator of a program called Cal Founders. We get together once a month and talk about issues that we face as founders. It's kind of like therapy for early stage founders, Joe. And so go to calfounders.com. You can sign up there and you'll get on the mailing list. And then last but not least, we are hosting an event called the Frontier Curve Awards 2018. It's all about blockchain. So if you've got a blockchain business idea and have a team or can assemble one with at least one member from the Cal community, you can apply. We've got some folks waiting in the wings who are part of Cal. So even if you're not a Cal member, we can place you with another person who's interested in participating and joining a group as well. So applications are open and they're going to close end of February. So apply soon, and that is www.frontierinnovation.vc.
Nice. Well, Michael, I'd really like to thank you so much for joining me on the show today. I've been a huge fan of B Partners for, years now, and really been following the fund and your progress. And it's been a really exciting process to get to know you, and really appreciated your sharing the B Partners story as well as digging into the blockchain with me today on the show. Again, thank you so much for sharing your story today on the VentureForth podcast.
Go Bears.
If you enjoyed today's show, please subscribe to the VentureForth podcast on iTunes, Google Play Music, Stitcher, or SoundCloud. You can also follow at VentureForth Pod on Twitter for our latest updates. As always, I'm your host, Joe Mahavuthivanij, and thank you for listening to the VentureForth podcast.